Welcome to this stream. I'm going to kick off very shortly. Let me just check everything's going. I'm going to let everyone know we're starting. Yeah, I think we're all set here. Hope everyone's well. Just going to give everyone a chance. A little bit of market news today. Not tons, but there's enough for us to be able to go over a few things because, of course, we've got NFP Friday coming up. I'm just going to send a message to everyone to let them know we're getting started. Today I've got my ginger biscuits here, you can see, and my coffee. So dip it in there, like the English do. Shall I go by? Okay, I'll be with you in just a second. Welcome to everyone coming in, by the way. If you do feel like pressing the like button, that would be very greatly appreciated. Many of you know where it is. So go ahead and do that, and I'll be with you in about 30 seconds. Okay, I think you just sign this email, and I think everyone will then wake up from their beds. I think a lot of people are on the other side of the world. I hope this doesn't wake people up in the middle of the night, but what can you do? Let's just take the stream. If you're not in my Discord, of course, you just saw it. There's a lot of people in there. You can come and join us. Okay. Right. I think we're all set. So welcome everyone. If you don't know me, I'm Will Sebastian, pro multi-asset day trader, founder of Be Profitable Academy. If you're coming in, the like button, go and press it. It's that boost rocket on the bottom left. Ask me a question in the chat box on the right. Okay, do both those things and you're golden and you're set and ready. News-wise, like I said, we don't have too much going on today. You might find that a few things pop out randomly. Or you get some announcements. There's been a lot going on around the world. You've had Speaker McCarthy removed, all sorts of different things. I'm just going to move my Discord over here. But let's kick it off with, should we start on gold? Okay, I'm just checking over in my Discord. Right, let's go for gold then, shall we? Gold. I spoke about it a million times. I think many of you know that. I said it was a short. I said it was a short. Had a broken record of me saying it was a short. It was a short. It was a short. Hopefully, you too shorted it. These highs. Why is it a short? Well, the price is high. Institutions like high prices and they get it short. It's similar to what I just posted on the CAD yen. Okay, look what happened there. Same thing. So anyhow, with that, I said, well, yeah, okay, it started to fall. Yeah, all right, we got it off this high here. Okay. What we were looking for then was a continuation of a fall. And that's exactly what you had. Remember, if you followed me and watched, I drew this trend line and I said, if you want to trade in a more probable way, you can do it by shorting trends. And that is why markets move in trends. They're range bound naturally. This is just how it works. It won't be any different ever. Okay, so you better get used to it. Nonetheless, I said about shorting it as the market fell, in line with the natural market move. It continued to fall and fall and fall. And you are where you are now. Now, where you are now is really interesting because you're bouncing off on your weekly, your 200 MA. So you've got a really significant technical zone there. Lots of traders are fully aware of that. And I wouldn't be surprised if you just stumble around on your daily, like this, and it trickles slightly lower and then it goes from there. Reason why, I mean, as you'll know, I called it 1838, so slightly under the water still, but like many of you know, I don't use stop losses. I hedge to get out of any trades that I'm not comfortable with. I use gains to mitigate loss. It's far better to do it that way, in my opinion. That's what my academy members do. Um, so really what we're looking for is just to hold this swing. Now, if we do come back up, this is your earliest point of key resistance on your higher time frames. If I go to my weekly, okay, you can see you get resistance here and resistance there. So we're using resistance as a means of exit, because when you hit resistance, the probability of you bouncing away from it to the short side increases. Naturally, therefore, you should be out of your long entries. Okay. I guess in short, if you're coming to a place that is now deemed a short zone at resistance, because we know you shouldn't buy into resistance, then naturally you should exit your position. So that would be a swing entry from here all the way up. There's about $60 there of movement. Failing that, I would only look to scale in if you can really fall lower. I prefer it just around 1760. That would be a DCA long position. So I wouldn't want to add before that. I wouldn't want to get long before that. Okay. All I'm really looking for is a re-entry down here. I think there's a good chance you'll get back first. Okay. Probably at least to 1850. You could take some of your position off at that point. But gold is a long. Okay. You've had really big fall here and a really big fall there. I think the last time it's fallen that much, okay, if you just use your net ruler, 5.86% in one go or 2 weeks. You had a fall from here that wasn't as big, and likewise before that. The last time you fell that much in 2 weeks or 3 weeks, still it's not as much as the fall now. So you haven't had a fall this large for a long time, is what I'm saying. Probably not until you go back to this point, okay, early this year. So look what happened on the last big fall, okay, and the last one, and the last one, and the last one. It always rebounds in a long, okay. That's how markets work naturally. So my bias is maintained long on gold. And again, if you just look at your daily, look how many days you've come down. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13 days in a row. When will it stop? You know, I said this about the pound dollar. I said this about the euro dollar. Okay? They just won't come down forever. They have to change. And you're starting to see that with a bit of minor reaction on the euro, a bit of minor reaction on the pound. Okay? They're just starting to turn. Again, if they go lower, I'm going to DCA in further. But after these considerable down moves, you know, you've really got to think what is likely. Of course, what is likely is a turn in the market, just like you've seen a million times before. So going on from that, so everyone's clear and understands gold, I'm long, okay? My bias is long, and I'm looking to the earliest points of key resistance like this for a swing exit, okay? At which point I'll look to continue to trade the natural market trajectory. You see, it all plays very well into one thing. We're looking short higher up, okay, because of this downtrend. And also we're exiting because of this downtrend. Right? Because we're looking for a long-term short side bias, which is exactly how we got this right, and this right, and that right, and that right, and all these short entries, all these pops up. That's how we got them right, because we're trading with the market. Now, if you're wondering why I suggested to do that, just zoom out. What did we do there? What did we do there? What did we do there? Why is it any different this time? The thing is, it's not different. It's not different whatsoever. And that's what market trading is all about. And I say this repeatedly, The point of trading is to look at what's happened and do it again. That's literally what the point of all of this is. It's not random. The markets aren't random. They're logically structured. They're structured in a way that works again and again and again. And that's what it's all about. A lot of people don't trade that way. Okay, in terms of, for example, the position sizes being too small so that they don't ever get to trade like this. Okay, if your short is too large, one of these shorts you get wrong is going to ruin you. So you've got to remember that the markets are simply a repeatable thing. They're the same thing over and over and over again. Once you train your eye to identify that, like you can in B Academy, the link is under the stream. Once you trained your eye to do that, everything gets just a little bit more easy, and you can put your probability of success up. Silver, similarly to gold, I like silver long. You've had 2 weeks straight down. Support, support, previous price rejection there. Like I said, you're looking for probabilities. Look at this. Okay, what happened right there? Okay, just think about how you're coming to the same level where you've seen reaction before, and naturally, therefore, your chance of success increases. If you look at the current price action, you can see you haven't really got a push. And in those instances, I would look slightly below for longs. Nonetheless, if you bought it there, you're attaining value. In other words, because you bought it at a low price, whether it comes down very slightly or not, really isn't going to matter if you're holding a swing up to here. Okay, so if you want a slightly better entry, you can wait. But if you're not so fussed, then simply you can just hold it. So I don't think there's as many silver traders in here, but my bias is the same: silver and gold, swing longs. New Zealand dollar and AUD dollar are quite interesting charts, and I'll tell you why. If I take all of this, can you see how choppy that is? And what I mean by choppy is just look at all the candle wicks. Okay, there's so many candle wicks in there, and it's because the price doesn't know where to go. Now, even more importantly, okay, if you go on your weekly, for example, what does this look like to you? Well, if you've watched me for a long time as well, you'll know that this is very, very sideways. Okay, and when you have a sideways market like this, it's because the market doesn't know whether it wants to go like that. It doesn't know whether it wants to go like that, and it gets stuck deciding what it wants to do. So that's where breakout traders lose all their money, because they try and buy to the upside and the market goes the other way, or they sell to the downside and the market goes the other way. Okay, so don't be one of those guys. What you want to do is, like I said before, trade with the natural market trajectory. If you just decided to get short all these different points here, okay, you would have made money. You can see there's a lot of rejection to the upside. The only caveat would be that you should be trading very small sizes in these instances, because you've got inherent risk in the market. Failing that, just don't trade it at all. Okay, it's okay to not trade sideways markets. Let the market just come down here in line with this key price action. Let it push up here in line with this. Okay, it's okay to have your hands off. Normally, I just scalp these markets. Okay, so I take tiny positions and lots of trades, but it's okay just to wait. Sometimes I'll look at it and say, you know what, I don't need to trade this. I can trade other things. That's okay as well. But my long bias comes in line with the line I've drawn here, 0.58, 152. My short bias comes in line with these key moving averages that are folding over in line with very recent downtrend. On your weekly, for a long time, okay, it still looks a lot like this. Okay, so you've come down for ages, in other words, and you're still downtrending. So it wouldn't shock me if you get down to that area in line with that candle wick, like I said, and you then move to the upside and then continue down like that. I wouldn't be shocked. That is the natural market trajectory. That's the way things have gone for a long time. And it's the same for various dollar pairs. But literally since 2011, coming out of the financial crisis, the New Zealand dollar has started to lose value for a considerable amount of time. You can see that every single push is getting less powerful. Okay, this push here is really significant because it's not very large. So I wouldn't be shocked if something like this happens. That. So don't go mad buying it, in other words. I think eventually you'll get down there. Maybe just stick to the short side if you want to. It's up to you. But you might have to hedge eventually. So that's New Zealand dollar. Funnily enough, AUD dollar is very, very similar. If you look at this push, only comes up here. It's really not a lot, is it? Really isn't. So can't see any strength still. I think you're going to get under this look. Have got specific long zones for that, however. Okay. I would say it's okay to take it long in line with this low, but I wouldn't be shocked if you get something like 0.58 in the future. So just be very careful. Okay. If you're going to buy it, do it lightly. Have seen already massive move from here, so I wouldn't be shocked if that helps. All right. Something like this. I don't think it will get as far, but perhaps like that. I think it will take some time to get down here, in other words. So I'll move on to other FX pairs. By the way, if you have any questions, just pop them in here. If you can press the boost button, I've not refreshed it yet, but if you can press that boost button now, it's on the screen to the left, or perhaps on the right if you're on your phone. Ask me a question. Ask me anything. Doesn't matter what it is, I can answer anything about anything. Really doesn't matter. My Academy members ask me things all the time, and so do people I don't know. Okay, so your euro dollar, we're getting into the good stuff now, really. Your euro dollar is really interesting. As you'll know, if you've watched my streams, posts, etc., we've been DCAing into the long side like this. These lines represent longs. If I flick down one more, okay, you can see the last point where we look to the long side and you got a bounce. So once you get the bounce, you've got a decision to make. Do I exit it or do I hold it? Now, the reason why the euro dollar is struggling at the moment is because it's coming straight into this. Now, it's really important to use your time frames to see these very early resistance levels because they are what stop price in its tracks almost immediately. And that's exactly what you can see now. The reason why you're stalling is because of this. Okay, so the price comes up from this candle wick, okay, and it comes up here and it's dead in line with this resistance. Now, for this market to retrace, okay, for this market to retrace higher around your 23.6, 38.2, your 50, your 61.8, for that to occur, you've got to go through this level of price action, and that can take a minute to do. So if you feel like exiting it, you know, the best thing to do in that instance is kill it off, but I would then rebuy it when it dips back like that. Okay, because it's likely you're going to attack that resistance, attack the resistance, and then eventually over time you'll get higher up. So my bias still remains long on the euro, and I should think you'll get a longer swing trade. It's just all about risk management. You've got to nail risk management, because if it doesn't go up and it keeps going down to other long zones like this, okay, and in line with these candle wicks below, then, you know, if you can't survive that, you'll never get a chance to buy it. Okay, so you've really got to be careful. I definitely still think it's a long. I mean, just open your eyes and have a look. There's 13 red candles in a row. When did you last have 13 red candles in a row? You'll have to show me because I can't see it. You've got green ones in between. You know, it's unnegotiable that that is a long. Look at your stochastic oscillator. You might find tomorrow with NFP and all news events like that the market changes drastically and pushes it up. So it's a good time to be trading it. Of course, you just need to make sure your risk is in line with the potential for the market to fall. So, so going on from that, longer term, I think you'll get to this point. That is my ideal zone of exit if I was swing longing it. That gives you 105 to 16. It's about 100 pips. Now, if you just look carefully as well, you can see that this MA here is curling over as well. So I should think you'll get in line with the two, and it'll be a really good tech zone to exit. You could start to lightly scale into the market short as the market rebounds. But just look at this, 13 weeks down. How far have you come back? Well, not even sort of 15%. Okay. So you just got to wonder. Now, similarly, you've got the same thing, literally the same thing on the pound. I'm also long on the pound dollar. I'm hoping for the news to pull it up in the near future, but I think you'll get back to this key moving average at least. We did rally from where I liked it long before, and I told everyone to exit and reshort, and hopefully you took gains on that. Like I said, it's still a long. It's a tech long. I think you'll get swing longs eventually above where you went before. Probably at least where you went before in terms of early key resistance at 1, 2, 3. Okay, maybe in line with news. Now, oil is probably the most important chart today. Someone asked me about just buying it at the top. It's not a good idea, as you've seen. I said, no, don't do that because it can easily fall. And literally the next day, it started coming down. So I really like this long. I've longed it myself. There's so much support here. You've had this positive market news sentiment. It gives you an excellent chance to hedge. I'm absolutely long on oil. And I've bought it already. I think you'll get a rebound. We just need a bit of market sentiment. This morning there isn't much because there's no market news, nothing going on. But I really like oil long. And then I'll continue to short it as the market rises. But it's times like this when you can use, like I said, I don't use stop losses because I can buy at these points to counter my short trades I took earlier. And therefore, if I do that, it gives me the chance to eliminate the trades I get wrong. Money I make on this long and rebuying it will be able to eradicate what I got wrong down here, down there. So it's much easier to do that than use a stop loss. Plus the sentiment has been up and up and up for oil anyway. So I wouldn't be shocked about it. The FTSE I really like long. I'm already long. I bought two places, early here and late down there, but I'm long at this point down here. Like it to 515. I think you'll get your first level of resistance. I think ultimately you'll get higher to 7632. So I'll probably hold swing trades ultimately for that point. And I think you'll get up there. If you go on your higher time frames, it's really great for a tech setup. Really like it when this happens because look, short, short, short. That's what I did, and many of my members did. Long, 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 long. All you do is take it long when it comes lower, short when it comes higher, and trade the market value. So I'm looking for a rise today, and that is my bias on the FTSE. Anyone who cares. I've started trading the CAC 40 as well in France, and I'll do updates on that. Your SPX, it's not really interesting to me at the moment, but I think you'll get up here. Okay, if you've got it long, I would probably hold it 4,350. You could start to scale into the short side. Okay, amongst this key resistance. Swapped your weekly, and you can see you've got more entries higher up to the short side. Again, if you look at gold, or you saw what I just said on gold, we're looking for something similar. Okay, like that. You should think that's not a million miles away. But yeah, I think you'll bounce off from this key moving average and come up here. If you don't bounce, I think you'll come to these levels of really, really key support. I really like it long at that point. and that is just below the previous low where you've got this candle wick. Okay, so that is my bias for the S&P. If you come lower, I like it long. If you come higher, I like it short. You'll notice I often say that within my analyses. It's just because I like to label areas well in advance, especially on higher time frames. Swiss yen, you could have hedged it constantly. Sure, many of you have. I have, hedge, and get rid of any shorts you took on the way up. Okay, like here, for example, you could have said here. Like I said, that's the way to do it. My bias is short 1642. Yens, I would just reshort them on the way up. And yeah. Oh, we've got a question. Good morning, Will. The problem with DCA and hedge is when you're wrong, you have to be on the charts many hours per day. Take action with many precisions. On the other hand, the stop loss. Well, I mean, it surprises me because you haven't got my method, so I don't know how you would know what the problem with DCA and hedges. That's what I will say. If you're swing trading, you don't need to be there. You can just set orders. That's what I do. For example, the FTSE is a prime example of that. Like I said, I'm long here. Okay, I've got positions that are underwater. I've got positions that are going into gains. I've got the same all the time. Now, within that, I've got hedge shorts set here. Okay, right there, I've got hedge shorts. I've got hedge shorts up here, but they're all orders for swing trades. So I don't need to be here all day. I could probably go out for the rest of the week. It would still do the same thing. It depends on your style of trading. But I would say if you don't have the method, I've said this for weeks, if you don't have the method, you are plainly guessing what will happen and how it's going to happen. There's no point in that. You're wasting time. That is just bluntly the facts. If you're scalp trading, it's different. But even if you were scalping, you would need to be on the computer all day anyway, because scalp trades are taken very, very quickly. So you don't have to be on the chart many hours per day, and I'm not, and I swing trade. It's just dependent on the type of trading you're doing, which is dependent on your risk management plans. But it's not as simple as DCA and hedge, and you just say it, and that's how it goes. You have to have the methods, just so you know. I mean, thanks for your comment anyway, but I can only say it so many times. You have to have the methods, or you will just be guessing how to do it, and it won't work. So yeah, that is my answer to that question or statement. So yeah, I mean, in terms of a stop loss, your hedge trades are effectively a stop loss. You're just stopping out part of your entry without closing the loss. So let's say you were 8 micros long on the euro dollar, and then you take it short 2 micros. Okay, you've temporarily stopped 2 micros, but you haven't closed the whole position. You don't need to be there to do that, because you would just be setting a swing entry. I mean, whereas I've got my euro dollar here, for example, if you're long now, okay, you should be comfortable with your drawdown because of your risk management plans and your set sizes. If you get to this point, you might have a hedge short of 10 to 20%. Okay, you don't need to be here to do that because when it swings, if it swings, you will receive swing gains of 100 pips. You don't need to be there to do that. Okay, so that's the answer. But you would know that if you had all the video series because it's all in there in 150 different videos. So yeah, moving on to the Euro Ord. I think in the nearer term, like you can see on the daily, earlier today, you've had a dip back here. You've had a very large green candle there. I wouldn't be shocked, particularly if you continue past this and you get in line with that higher moving average there. And I think in terms of short entries, you will get them, like I said, in line with gold and the S&P and everything like that. I think they'll come higher up, and I have got short entries, swing entries, peaceful antelope. Don't worry, I will be out when it happens. Uh, up here, okay. So that's where I like it. I will say absolutely the biggest thing I've ever seen in all my mentoring academies, lots of people will say a statement about what they think something is without actually having it and trying it. You can't make a judgment like that because you're just doing what you think is right, but it's just not reality. So just be careful because it pulls you back massively. All I can say is just get the tools and start. Because the longer you delay and delay and delay and delay, and the more you try and DCA and hedge, and then it goes wrong, um, the worse it gets. But remember, it's not just DCA and hedging. That is one part of the whole system. It's enormous. Okay, there's many things in there, and it's not just one thing. Be very wary of that. Um, so dollar CAD as well, I like it short. If you look back previously, you can see we've fallen from here several times, just like gold as well. Okay, that's more or less what you had. If you do come back here, it wouldn't enormously shock me, not massively, and I would just continue to DCA short up there. Nonetheless, I'm short now on the dollar CAD. Has anyone got any questions for the chat box at this current point? If so, do make your voice heard. FTSE is up and I'm in gains now. Can't see any questions. Euro, pound ord, I think you'll get higher as well. I called all these pound trades long. Pound ord, pound New Zealand. I think you'll get higher on all of them eventually. I think they're going to have to break through a lot of resistance before then. Hopefully the news tomorrow will be the thing that does it. So yeah, I mean, I've gone over many things. Oil long, gold I'm long, pound, dollar long, indexes I'm long. Everything is flipped. Okay, if you look at your Dixie, it's way, way up. Okay, so we're trading the opposite side. I mean, if you look how many weeks it's gone up, it's ridiculous. All the way from July to now. It has to come down at some point. When was the last time you had that many green candles? Okay, without any red? Probably around here. Okay, it doesn't happen a lot. When it does, you often get significant falls back to key levels of support, and these moving averages rise. So, has anyone got any questions? Like I said, if you've learned something, press the boost. If you are serious about trading, come in the Discord and send me a message on DM or get me on TradingView, and I can help you out. But if you don't take any measures to make changes, you just won't get results. Okay, because you're guessing what is right, what works, what doesn't. If you're not a professional trader, that will never work. You cannot guess it on your own. I tried to do that for years. You just need someone who knows what they're doing to show you. So thanks a lot for coming. Do press the boost there if you've enjoyed it, and get my free training underneath. Come in the Discord, whatever. Follow me on TradingView, and I'll see you in the next one. Thanks, guys. See you there.